Good morning. All right, so just a checkup on the portfolio. So here's what's really cool. So back in February, right after I just started, the estimated 12-month or estimated monthly income over the next 12 months was $6.48. And at the beginning of March, it was $10.37. And now for April, going into the month of May, it is going to be $15.84. So, yeah, that's pretty cool. So, yeah, for those of you who don't know, I'm pretty crazy, and I think that I can beat or at least meet what Warren Buffett said he could do a few years ago, and that is if he were managing less than $1 million, that he could earn a compounded rate of return, not every year, but he could earn a compounded rate of return of about 50% a year over the course of 10 years. Which, if you do the math on that, if you took $1,000 a month over the course of 8 years, you would have a portfolio worthly, oh my gosh, roughly worth, I can't talk today, roughly worth $1 million. And that portfolio should produce about $40,000 to $50,000 in income every year. So that's what I'm trying to do. And I'm crazy enough to think I can do it. But anyway, so for this month, so all I did was pretty much add to some existing position. Tyson, which is, for those of you who don't know, it's a chicken meat processing plant, and they also have their own chickens. So if chicken prices were to go up or even go down, it would still benefit that company. Because if it goes up, well, then obviously they can sell it for more. But if it goes down, well, then the supply or the amount of people they would be able to serve would increase. So to be honest, if prices come down a little bit, it's actually better for some of these commodity companies, even though that kind of seems counterintuitive. But anyway, Magna, which is an auto parts maker based out of Canada. XLE, because that is again a fund. If you haven't seen my previous videos, it's a fund that invests primarily in the 30 best energy companies in the United States. And yeah, oil is literally being given away right now because nobody has any place to put it. I don't see that lasting very long. It can last a few months, but I don't see it lasting very long. And the flip side of that, I really don't want to see $100 barrel of oil prices, but you never know. And then I added a little bit to BMW. And then of the $1,000 that I saved this month and invested at the end of the month, I put about 200-ish in some risky stocks. DVD, which is Dover Motorsports, Dover Speedway, kind of a motocross type company. There's some risk there, but there's also a lot of upside. And then Goodyear Tire and Rubber. They've really been struggling this year, but if you look at the data that's out there, you've got several automotive companies that have produced record after record after record of new car sales for the past 5 years. There are so many used cars out there. There's so many cars out there, period. And at some point, they're going to need new tires. So that's a very simplified version of why I selected that company. But anyway, so that's the one I selected. So what the heck is happening in the market? Like this COVID stuff, the shutdown, the 4.8% contraction in GDP, it's crazy. And yeah, it is. I actually want to read this article because I think this is insane. Oh no, I've lost it. Hang on. Wow, I had it right here. Haha, here we go. All right, so this is in the Wall Street Journal. Listen to this craziness. A rally in corporate debt is enabling riskier companies to raise much needed cash while fueling debate over whether investors have grown overly optimistic about the economy. From April 13th through Friday, companies such as Ford Motor Company, AMC Entertainment Holdings, which is a heavily indebted theater, And SeaWorld Entertainment has issued a combined $28 billion of speculative grade bonds. Yeah, speculative grade because the Fed stepped in and bought their existing bonds because nobody wanted them. And so now they go back into the markets, borrowing at ever higher interest rates when they couldn't afford the ones they had before, to stack new debt on top of the debt that they do still owe the Fed. The Fed didn't just erase it. It's still there. They still have to pay it back. Oh, and it gets even better. So I haven't read up on this, but I saw a report yesterday, and you might want to fact check it, but I still don't believe it. At this point, anything goes. So the Federal Reserve has set up lending facilities for these companies like this, to borrow from them, since going into the real market is too expensive because they can't afford the interest rates. Forget the fact they can't afford to pay their debts. They can't afford the interest rates. Let that sink in for a second. But then the Fed has set up lending facilities so that these poor companies who need a break can go borrow at 3%, and they can borrow in the short term 6 times their net earnings. And those are pre-earnings. That's not forecasted earnings, which nobody's doing because nobody knows what this crap is going to look like in the next 6 months. We know it's probably not going to look great, but anyway. I'm not saying to bet against these companies because you really don't want to fight the Fed. I mean, the man's in the basement printing money, so just leave that alone. But if you take anything from what I have to say, stay away from these companies, because even if their stock continues to trade, you don't own it. You don't own a piece of the floor that are in the factories of Ford Motor Company. The Fed has whatever is left, and any earnings that they do produce, hopefully they do produce something, will all go to the Fed. Yeah, I don't even know what's going to happen to their existing debt, but that's pretty sad. Which kind of leads me into, why do I select the companies that I do? Like, what's so special about, they're small, they're risky, but why, of all the small and risky companies, did I select Dover Motorsports and Goodyear Tire and Rubber? Why am I selecting BMW when I think the automotive industry is imploding right now? Why would you buy these companies? Why would you buy Tyson? Like, why does that make sense? Well, to me, it makes sense because, first of all, these companies have well-established brands. They do have products that people are going to want in any type of environment. But the thing about BMW that sets them apart, the thing about Tyson that sets us apart from other meat manufacturers, same thing for all these companies, is that they have what you would call in the financial world strong balance sheets. They have enough cash. They have very low, if any, levels of debt at all. So I don't have to worry about them having to deal with the banks, or worse, getting into bed with the government. And they reward shareholders. They have great track records of raising their dividends because they're managing the business's assets very well. If you're going to buy any asset, especially if you have someone managing it for you, that's what you want. Anyway, to me, it's really simple, but that's how I do things. That's how I make my decisions. And so, yeah. Oh yeah, what about Southwest? Okay, I was wrong. Flat out, I was wrong. Of all the airlines, I didn't think that they would necessarily need to go to the government and take a bailout. Initially, they were not one of the original ones. The ones that did were Delta, American, United. 10 days into the crisis, all sitting at the White House, throwing their hands up, saying, you got to save us. A couple weeks later, Southwest comes on board. And if you look at the terms that they got, I mean, clearly the terms that the government gave them were better than what they would get from any bank. Southwest needed some money, but they could have easily raised that money in capital markets in the private sector, even with things being crazy. Nevertheless, the terms, and if you're running a company like Southwest and you look at those terms, yes, on paper you should take them. I'm not too crazy that they took money from the government, so I'm not buying any more, but I'm also not selling it, and I don't regret buying the company. I think it's a good airline. And I also think of all the airlines, they will pay their debt off from Uncle Sam the fastest. So we'll watch and see how that pans out. But yeah, I'm not just jumping in and very excited about a whole lot more. And then a lot of people ask me about crypto. All right, so here's the thing, the short and sweet on cryptocurrencies. Do I think it's really smart? Oh yeah, you bet, absolutely. Hands down, the technology that is behind that is awesome and mind-blowing. That being said, what gives something like Bitcoin value, or at least people think it has value, is that people think it will replace common currency. Okay, Bitcoin in its current form, in my opinion, and I don't know anything, is effectively worthless, apart from the fact that a lot of people think that it's just a smart thing to own. And in a way, yeah, that gives it value. But a lot of those people who are intelligent think that it's going to replace currency as it stands. Bitcoin in its current form, now it could change. Maybe if the government steps in and says, hey, we actually want to use this, if that happens, well then yes, it's worth a lot more than it is right now. And I will be flat out wrong for saying this, but I don't see that happening. Banks like JP Morgan, all the big banks who own the stock ownership in the 12 district banks of the Federal Reserve, have their own and have had their own form of blockchain transfers or cryptocurrencies for decades. This isn't new to them. And so when the powers that be, and I do see that being the future, but when the powers that be decide to change a currency or decide to use those types of contracts, if you want to call them contracts, crypto contracts or whatever, cryptocurrencies, they're going to use their own. I don't see them stepping in and figuring out how to use specifically Bitcoin or Ethereum. They'll use their own version of it. And at the end of the day, the guys that are behind current cryptos that are out there now, they probably are smarter than the government, to be honest. In fact, there's probably no way they're not smarter than the people that... Anyway, I'm not going to go down that rabbit hole. But at the end of the day, what I'm saying, though, it doesn't matter. And I hate to say that, but it really doesn't. Because there's one thing that everybody forgets. And that is, there is something that backs our dollar. People say, well, the dollar's not backed by anything. It's a fiat currency. Well, that is true. It is a fiat currency, but it is backed by the sovereign might of the United States, which is backed by its military. The Navy alone of the United States could wipe out roughly about a quarter of the world before you could stop it. And that's just the Navy. The guys in the Army, like me, and a few others, Air Force, and of course, all the side guys that, we spend $100,000 on a hammer, those agencies, yeah, all that the United States government as a whole has to bring to bear, okay? If that ever changes, then all bets are off. But as long as that holds, the US dollar or US crypto, however that pans out in the next 20, 30, 40 years, is going to be dictated by the existing world order, existing powers. And so, yeah, that's just how I see that. Hey, but I could be wrong about all this. What do I know? But yeah, hope you enjoy my update. And if nothing else, you can watch me lose a lot of money if you think I'm crazy. Or, hey, if this pans out, well, the good news is, even if you don't follow me, which I don't really encourage you to do right now, but if I turn out to be right in the next 8 years, then I'm just going to keep doing it. So stay tuned, have fun, and stay safe out there.